FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Today's show is brought to you by Blue Sky Uranium Corporation. Blue Sky has first mover advantage in Argentina in the world's newest uranium and vanadium district. With an existing near-surface deposit that's open for expansion, Blue Sky also controls a massive district-scale land package with mineralization along a 145-kilometer-long trend. Blue Sky possesses tremendous exploration upside and is an excellent leverage play on rising uranium and vanadium prices. The company is run by a best-in-class management and technical team with proven exploration and development success in Argentina. Blue Sky Uranium trades under the ticker symbol BSK on the Toronto Venture Exchange and as BKUCF on the OTC. For more information and to stay on top of the latest news, go to blueskyuranium.com. That's blueskyuranium.com.
The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and it's 3/18/2019. Well, what's happening out there now with the financial system? John Rubino and I were just discussing that there hasn't been a bank closure in the U.S. in years. I don't remember the last bank, probably some podunk national bank in some backwater town has been closed, but major bank hasn't been one shut down in nearly a decade. How could that be? Is the banking system so solid? Well, also, we're going to talk about the Fed because it's Fed week. What is the Fed going to do? Were they to raise rates? What would be the ramifications, or just leave everything the same and hope for the best? And John, happy Monday. So what is the Fed going to do?
Hey, Kerry. Yeah, it's Fed week again. Somebody did a study a while ago that showed that all you really have to do is buy stocks during a Fed week and then sell them the next week, and then just don't do anything. Don't be long stocks until the next Fed week, and you'd made a ton of money. You'd beat the market handily because the Fed tends to say things at its meetings with the markets in mind. It's as if they focus grouped all their phrasing, and they say things that are designed to calm the markets down, and the markets hear that, and they're desperate for adult supervision because nobody in the financial markets knows what's going on anymore. No hedge fund still has a black box algorithmic trading system that's based on the past that still works in the present because the markets are all manipulated now. So all they've got to hang on to is the words coming out of the mouths of Fed talking heads. So you usually see really positive changes in stock prices and often bond prices when the Fed has a meeting and announces something and talks for a while. This week probably won't be any different, especially because the Fed has already been slapped down by the markets over the last few months. And they capitulated already. They already said, okay, we're not going to raise interest rates anymore, and we're going to stop the contraction of the balance sheet, Fed balance sheet, which is to say we're going to stop contracting the money supply. Mm-hmm. So this meeting will just be a ratification of that, probably. I mean, that's what everybody expects. If they were to go back to tightening, which, logically they ought to, since the only reason they stopped tightening was because the stock market tanked in November and December. Now the stock market's back up to near record levels in the U.S. So that takes away the rationale for, pausing the tightening process. But it's unlikely that they'll do that because the markets have already shown them what happens if they do. So we'll hear lots of calming words from the Fed. And probably no action this time around, because that's been what they've been doing for the past 2.5 months or so, where they just say nice things and hope that does it. And so far it has. That won't always work. And with the global economy slowing down some now, and other central banks going back to actively easing, the Fed will probably be pulled along. And it's highly likely that their next move is going to be a cut in interest rates rather than an increase in interest rates. And on the balance sheet side of the equation, they'll stop letting bonds run off of their balance sheet when they mature and start adding financial assets of some sort. So we'll be back by probably year end in a new version of QE and a new version of ZIRP, NIRP, the interest rates will go down. And at some point, they'll have to cross over into negative territory. So we'll be back in something that looks an awful lot like 2016 in 2020, just because there's no real alternative out there. That rates were raised a little bit over the past year. Has already slowed the economy down, caused the financial markets to flake out, and so the damage is already done. So to repair that damage, they're going to have to start cutting rates again pretty soon.
You think? So we're that close to seeing rate cuts already? Well,
not necessarily close, but the next move, whenever it comes, whether it's 2 months from now or the end of the year, will be lower interest rates. Because all this debt in the system is inherently deflationary, and the global economy is starting to slow down. And China is partially a trade war story, but their macro numbers are really, really underperforming. They're really disappointing people. Japan just announced that their exports were down dramatically, and in part that's a China story also. Europe. The European Central Bank just cut its year-ahead growth estimate for the Eurozone dramatically into a range that's unacceptably low. Germany's inflation, which was running 2% plus very recently, is now in the mid 1% range. So a lot of signs out there point to a slowing economy, which the world's central banks are going to have to respond to, because you can't have the next recession with all the debt that we've taken on.
What would happen then?
Yeah, when the next recession happens, so many over-leveraged borrowers will start to default that what that leads to will become incredibly unpredictable. It could easily metastasize into another Great Depression. We're just that leveraged. There's nothing really ideological about that or really theoretical. It's just the more debt you take on, the more bad debt necessarily that you take on. Yeah. And we've taken on so much now that a big chunk of our debt is, by definition, bad debt. For instance, we have vastly more corporate debt out there that's one notch above junk than we've ever had before, maybe 3 times as much in nominal terms as we did at the beginning of the last recession. And one downgrade, and those companies are no longer investment grade, which means the interest that they have to pay to borrow going forward goes way up, and that impairs their both their credit worthiness and their ability to function in some cases. So that's just one domino, just one thing that a small change in the macro environment can bring about in terms of a crisis. So there's a lot of stuff like that out there. The auto industry, or the auto loan sector for the U.S. is on the verge of a bubble bursting.
Rolling over.
Student loans, of course, and credit card debt is back at record levels, and mortgages are high. With in a lot of cities, home prices going down again. So all of that stuff is out there, and the Fed's aware of it, and other central banks are aware of it, and that's why the other central banks are starting to ease now, rather than just sitting tight, and why the Fed will be pulled along pretty soon, I think.
So easing is in the offing. How much can they cut rates, though? They aren't very high now, historically speaking here. 3s, the Fed funds rate's in the 3s.
Well, that's why I think the Fed funds rate is in the 2s, but I'm not 100% sure where it is in the 2s. That's why this was such a disappointment, I think, for a lot of the central banks. They hoped in this cycle to raise rates far enough to give them some ammo for the next downturn. And normally, for instance, the Fed cuts the Fed funds rate 5 percentage points. In other words, from 6% to 1%, or from 8% to 3-ish% or something like that. And this time around, if they're only up in the 2s, a 5% cut, 5 percentage point cut, would take them sharply into negative territory. And it's even a bigger problem for the other central banks like Japan and Germany, or Japan and Europe, where interest rates are already at zero-ish. So for them to combat a recession with a 5 percentage point cut in short-term rates would take them, vastly further into negative territory and into a place where they've never been before, where nobody's ever been before. We've never had a big country with negative 5% interest rates. So we would be doing something that's never been done before for good reason. In other words, we don't have sharply negative interest rates because that brings with it a whole bunch of unintended consequences and really impairs parts of the financial systems of those countries. But what's their alternative during the next recession if rates are already at zero? So that's the problem that these guys are looking at right now, is that they didn't get a chance to build up enough ammo to fight the next recession. And because we're 10 years into an expansion, statistically speaking, the next recession is probably pretty soon. The average expansion is 6 years long. So we're not that far from being twice as long as previous expansions. So statistically, can't go on much longer. And it isn't. You're seeing a lot of, as I said, indications of a slowdown out there. So this is going to be really interesting for these guys and really stressful for them because, picture a soldier going into a war without very much ammo in his gun. Yeah. It's something where you don't necessarily expect a good outcome because you don't have the tools to deal with what happens normally in that situation. And that's what they're looking at now. So more than likely, we'll see some experimental stuff. They'll have to pull some new thing out of their hat, and it's not clear what that'll be.
Pull a rabbit out, huh?
Well, in this case, it might be equities. They might just start buying the stock market and try to elevate financial asset prices to a level that'll keep the economy growing. In other words, put enough money in the hands of investors to induce those investors to cash out a little bit and take a nice vacation, buy a new car, put down a deposit on a new, all the stuff that we do with borrowed money. If your stock portfolio doubles, then you're going to feel a lot more comfortable about buying some new frivolous thing. And that's what they want us to do. They want us to be out there buying stuff we don't need with money we don't have in the hopes of getting through the next election cycle, because that's really all it's about at this point. It's how do you get the guys making the decisions reelected? And it's getting harder and harder, obviously, based on all the elections out there. So they're going to do more and more extreme stuff as it gets even harder from here on out.
Right. For sure. Yeah. There's not a lot of easy alternatives here, ways out of this box. In fact, there aren't any. And that's the big problem, right? So what about the new Basel III capital requirements for banks? It seems that gold is going to be treated a little bit differently now, isn't it? Yeah,
gold becomes a much more favorable asset for central banks in the global financial system going forward under Basel III, which I think kicks in at the end of this month. And that's part of why central banks have been buying gold rather than selling it over the last few years. China and Russia have always been accumulating gold, but now you're seeing a lot of other central banks start building up their own gold reserves. And in the past year, it was something like 600 tons of gold that central banks bought, which is a really big number for the central banks because they were selling several hundred tons of gold per year as recently as a decade ago. And that was putting downward pressure on gold. Now you've got the central banks as one of the big buyers in this market, which is a really positive development when a new big buyer comes in. Now, of course, the central banks have a bad record of predicting future price changes in gold, but in part that's because they manipulate the price of gold. But as they accumulate more gold, it becomes in their interest for gold to go up, right? Because they can market to market on their balance sheet, and their balance sheet gets stronger as the price goes up. So that takes away one of the headwinds for the gold market. And it takes us closer to a time when central banks are less opposed to the idea of going back to some version of a gold standard as a way of stabilizing their currencies. With them accumulating gold, what we need is a currency crisis, maybe related to negative interest rates. Well, when interest rates are negative, why would anybody want to hold a currency in a bank account? Because you just lose money month after month and year after year. And that could cause a plunge in the value of these fiat currencies, which will lead the central banks to want to stabilize it somehow. And their gold is going to be going up relative to those currencies. And so maybe we go back to something like Bretton Woods, which was the financial system that prevailed in the 1950s and 60s, or some other version of a gold standard. But, the pieces are falling into place for us to finally go back to some kind of a sound money system. So this is an indicator of currency problems coming, but also of the solutions taking shape. So it's a bad thing if you have a big dollar-denominated bank account, but a good thing if you're accumulating a lot of gold right now, along with the central banks.
Yeah. Yeah. Well, it's an interesting world we're living in here, John, and that is definitely a bullish thing for gold, no question about it. Not to mention $1 trillion deficits, not to mention the whole world is, in hock, up to its eyeballs in debt. So what do we do here? Well,
to expand on the world in hock thing, you're seeing a lot of governments and would-be leaders rationalizing the amount of debt that we've taken on as a way to push policies that involve a lot of spending. You're hearing a lot of, well, in the richest country in the world, there's no reason why we can't, run a global military empire or provide free stuff for everybody. And the philosophical and theoretical underpinning of that is that debt doesn't matter. And we should be able to borrow as much as we want to,
of course,
or just create as much new currency as we want to. The fact that a big chunk of the Democratic Party now is avowedly socialist, and that modern monetary theory, which is a monetary theory that says governments should be able to create as much currency as they want to, and then just use it however they want. It isn't a surprise that those two things are happening at the same time, because they go together really nicely. A philosophy that says we need to ramp up government spending dramatically, and a philosophy that says it's fine for central banks to just create as much new currency as they want to. Those things dovetail perfectly into a coherent governing philosophy, maybe for the next, Bernie Sanders administration or something. And when that happens, that's kind of the end game for modern currencies, because
Bernie, you're not really serious, I hope. Bernie, President Bernie
Sanders administration,
he'll die on the he'll die on the pulpit. The guy is never going to be president,
Well, not because of his age, though, Kerry. 75 is the new 45. We're in way
for
better
Bernie.
shape.
Bernie's been partying like a commie, and he's been partying like it's a 1917.
Well, so that's going to be the big rap against Bernie if he gets nominated. But so to take care of that, he just names a young socialist congresswoman as his running mate.
Alexandria Ocasio
she's too young, unfortunately, or she would be on the short list, no doubt. But Elizabeth Warren isn't young, but she's young compared to Bernie. So that could be a ticket where he can say, I'm old.
She's not credible anymore. I think she's lost her credibility. I don't want to get into a whole political Pocahontas. I don't want to get into a whole political diatribe here because it's a freak show. I mean, all of the candidates, with the current occupant of the White House included, is just a major freak show here, John.
Yeah. Well, but that's the script that we're living through right now. That's how it works, is politics gets crazier and crazier as debt rises. Yeah. So this is completely to be expected, that out of the mainstream political philosophies and formerly fringe candidates move into the mainstream and start getting a lot of votes. So you look around the world, Italy's government, what's happening in France right now, what just happened in Brazil,
it's madness,
and Donald Trump. Well,
total madness.
But it's what is happening and will continue to happen. So you can't write off people that 5 years ago you thought were just crazy, never going to happen kinds of candidates, because that's the kind of world we're living in now. So literally, a socialist adherent to modern monetary theory could be the next president of the United States. That's less crazy than the idea of Donald Trump being president was 5 years ago.
Yeah, well, you got to love these politicians. They're something else, They are special, and they're different than, like F. Scott Fitzgerald once said, John, the rich are different than you and I. Well, politicians are different than you and me, because they march to the beat of a whole different drummer, don't they? I mean, they're totally beyond the pale.
Well, to get elected, you have to do a lot of things that change you.
All right.
So it's hard to get all the way to the top of any democratic political system without becoming a person that you never thought you'd become.
Yeah.
So that's just kind of who we end up with. It's very rare for a politician on a national stage to just say what they think, which that makes Trump more fun than most of them, because he really does just say what he thinks, for better or for worse.
You got to admit, the guy is definitely fun.
Yeah.
I mean, he's a laugh a minute.
Reagan was like that back in the day. Yeah. Most of the time, he told you what he really thought. And Ron Paul is like that. That's why he's so interesting. And frankly, a lot of the socialists are in that category too. They are, in one sense, admirable, because they're not making stuff up just to get elected. They're not focus grouping their speeches or anything. Totally. They're telling you what they really think. And to me, that's refreshing.
It's very dangerous, John, for a politician to actually say what they think.
Well, that's why it hardly ever happens, because to tell a hard truth. The reason it's a hard truth is that you're offending a lot of people.
And you're telling them what they don't want to hear.
Yeah. But some hard truths should be told.
Yeah.
And
like that
to get guys up there telling what they see as hard truths is inherently more interesting than these, political machines that have been focus grouped so completely that they're just saying platitudes that appeal to 51% of people. Yeah. And that's not interesting. But what we got now is very interesting. And we're going to have real choices going forward. And they may be choices between almost fascism and communism. We might be looking at Hitler-Stalin kinds of elections at some point in the future, just because the fringe candidates have moved to the middle.
Well, it works so well for Germany. Why wouldn't it work for us? Right? Jeez. I mean, what people don't know, and I only found this out reading some World War I history tomes, was that when Russia was defeated in World War I and humiliated by Germany, and what did they do? They sent over Lenin in a sealed rail car and dropped them off there and said, you go do things, take over. It's all yours. And that's why we got communism in Russia for all those years. It was a direct outcropping of World War I. And, there's all sorts of theories of the Rothschilds being involved and everything else. Maybe it's true. Maybe it's not. I can't really say that for sure, but I can tell you that that communism was a direct outgrowth of World War I.
Well, communism had to be tried.
Yeah.
Because it sounded great to so many people, from each according to his abilities to each according to his needs.
Yes.
Sounded like a beautiful way to organize a financial system in a world of early stage industrial capitalism. That was a horrible life for a large number of people.
Yeah, grave.
And so when somebody came along who said, well, we can fix this by redistributing all that wealth that you see but you can't touch, it had to be tried for it to be discredited. And we're kind of back in that place again, where there are a lot of political philosophies that sound great, that sound just as good as Marxism sounded back in 1999. To a lot of people who haven't lived through a lot of history or read a lot of history books or otherwise paid much attention to the world. And the scary thing is about today is that these things might be tried again. We might actually go back to some version of fascism because remember, fascism also sounded good to people back in the day.
The trains run on time.
Right? Trains run on time. You organize a society so that it creates lots of wealth. And you're going to break some eggs to make that omelet. But the trains will run on time. There will be a wide distribution of wealth because the companies are so efficient and profitable. That stuff sounds great until it's tried and it turns into a totalitarian dictatorship. And we apparently didn't completely learn that lesson last time around. So we're heading that way now, except, Carrie, that we're heading that way with next generation surveillance and control technologies that were only dreamt about back then by the last generation of dictators. So, we've got artificial intelligence that can manage all of or can scan all of financial or social media and pick out changes in the behavior of individual people that point to changes in their political behavior so they can be addressed by the government before they actually even start protesting. We got all kinds of things like that.
They'll never catch me, John. They'll never catch me.
Oh, the tone of your voice just now just flagged the AI, the NSA that's watching you.
And don't forget, when this gets posted to YouTube, they transcript the entire thing. Now, they don't do a very good job of it. Honestly, they're kind of bad at it, but there is a transcript on YouTube, and I can show subtitles when I play the stupid YouTube. But
that's just first generation transcription.
I know. Well, it's
5 years from now, they'll be able to do it perfectly and know exactly what you were saying.
It's probably 8th generation, but we just don't know. But I totally agree with you. Anyway, that is it for today. Make sure you check out John's site and sign up for his newsletter. It's dollarcollapse.com. By far, some of the best writing on the web, and there's all too little sound and good writing, quality writing. You just don't come across it. And sign up at us, financialsurvivalnetwork.com. If you are listening on a podcast or watching on a YouTube, we urge you to please subscribe, like, and share. Really helps us a lot when you do that. Helps get these ideas out, which often there's no other way they can get out till we get censored anyway, John. So till next week, we'll talk to you then.
See you, Kerry.
The Financial Survival Network. It's all about what's next.
Today's show is brought to you by U.S. Gold Corp. U.S. Gold Corp is a U.S.-focused gold exploration and development company advancing high-potential projects in Wyoming and Nevada. U.S. Gold Corp has consolidated a district on Nevada's productive Cortex trend and is advancing the Copper King project towards production in Wyoming, led by a team of prolific company builders and renowned explorers, including Dave Mathewson, who is directly responsible for several major Nevada gold discoveries. U.S. Gold Corp is well-capitalized and has an extremely tight share structure with less than 20 million shares outstanding and trades on the NASDAQ, a major exchange, under the ticker symbol USAU. To learn more, go to usgoldcorp.gold. That's usgoldcorp.gold.
The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. It's 3/18/19, day after St. Paddy's Day. Hope you all enjoyed. And, well, if you thought that the bar scene out of Star Wars was a good analogy for political parties and crazy get-togethers, well, the current outcrop of Democratic candidates really makes the Star Wars bar scene seem very normal and tame if you've seen any of them. It looks like anybody who can run for president and is a Democrat is running for president. And which one of the motley crew will prevail and get to face off against Donald Trump? Well, who knows? But usually money talks and Democrats walk right into the polling place when you give them the walking around money. Anyways, as always, we invite you to join the dialogue, the discourse, the discussion, be a part of the show. I really love reading your emails, kicking back, having that cup of Java in an undisclosed coffee shop here in northern Palm Beach County and reading what you have to say. Well, let's hear what Dr. Gerard Lameiro has to say. And you can find his info at greatnewsforamerica.com. And then we've got the new book out, more greatnewsforamerica.com. We're looking at the lineup, the Democratic lineup for 2020. And I just have a feeling this will go down as the worst crop of candidates that ever got concocted in the history of elections in America. And there has been some doozies like Millard Fillmore, like the Whig Party. I'm thinking we need to bring back the Whig Party here. You know, Gerard, the Whig Party was populist in nature. They were anti-Masonic, which I had no idea about till I started researching them. And they were kind of anti-Jeffersonian, but they weren't really Federalist. So a lot of these failing Democratic cities, the last non-Democratic mayor they had was a Whig, and the Whig Party went out of existence in the 1850s. So what are we supposed to do here?
Well, I'll tell you, I predicted back in 2015 the Democratic Party would end. And I always said it's hard to put an exact date on it as you see a party kind of fall apart at the seams. But just as the Whigs ended, they didn't last forever. I think the Democratic Party is on the way out. I think 2020 is going to be the finale, the if you will, the last big event in the Democratic Party history. I think the particular set of candidates that are running are close to absurd in terms of people that are qualified to be president, and the stories are just one after another that are hard to believe. If we have time, we can muse over some of them. Yeah. But I do think the Democratic Party is going to end in 2021 as a result of a major loss in the House when it goes to a much more conservative House, and when Donald Trump is easily reelected with currently, in my model, 367 electoral votes.
Really? Well, you know what I find interesting? Okay, now I will admit up front that I'm Jewish, but I will tell you this. Without the Jewish contingent in the Democratic Party, there will not be a Democratic Party. Okay? It will cease to exist just when the Jewish voters wake up and say, I'm not going to support a party that supports anti-Semites and people that want to eradicate Israel. And they've got 3 or 4 of these people there. Keith Ellison, they've got Omar, whatever her name is, Talib. And, this is going to cause a humongous fracture in the party. And the Jews are eventually going to flee because these people show no signs of backing off on their anti-Semitic rantings.
That's absolutely correct. The Jewish people have been very nice to the Democratic Party, supporting them when they didn't always strongly support Israel. But some of the current crop that's in there that are essentially sounding anti-Semitic as you can get, and not being reprimanded by their own leadership, and not being reprimanded by the House because that's run by the Democratic Party, I think is a step in the wrong direction, and they're going to continue to lose support among Jewish folks.
Mm-hmm. Yeah, exactly. To the point, the fracture is going to get really bad, and they think, we will just make up the difference with the burgeoning Islamic minority. There's already as many Muslims as there are Jews in the country, but it's not that simple. The Jews, from law firms to professionals to advertising, PR, are so ingrained into the Democratic Party that if they withdraw, and a sizable portion, not all of them are going to, obviously, a sizable portion of them withdraw from the party, it will collapse almost immediately. It's just not going to survive a mass defection of Jewish voters. It won't. And the Jewish infrastructure, because they've always held high-ranking positions in local parties around the country and in places like New York, in Chicago, in Boston, in Florida here. And can you imagine what would happen to the Democratic Party with a mass defection of Jewish voters? It would be Armageddon for them. Same to a lesser extent in California. So I think this is the death knell. I'm beginning to agree with you. I wasn't sure if you were going to be correct, but I'm beginning to agree with you.
They all told me in 2016 when I kept saying Trump was winning, and they didn't believe me then.
You never heard that from me. You never heard that from me.
Yeah, I look at, right, exactly. I look at 6 or 7 different variables that constitute whether or not a party is successful at the polls. And the Democratic Party, the numbers have been down and to the right on the variables that I study, and that in my models, my forecasting models. So the party is going down. Any type of additional major loss, like, for example, the Jewish support, would be catastrophic and would just make it a snowball, that goes out of control. It'd be an avalanche. It's going down right now. But if Jewish folks walk out in the next year or two, the avalanche is going to be unstoppable. It'll happen very quickly.
Yep, it's going to happen here because they're not willing to confront the anti-Semitism. It's been a story in a number of cities, too, for a long time, like Chicago. And, it's just rising tide of anti-Semitism, wherever it might be emanating from, is going to be unbelievable. So when we're looking at this crop of candidates, if you want to call them that, it's a freak. It's a total freak show, isn't it?
Unfortunately, yes. I mean, people would like to see sensible people, at least that have some type of sensible, even if it's liberal, point of view. But these people are just outrageous. The green plan, that sort of thing, which basically would put our economy in the tank. It would bankrupt our economy. With my economics background, I think it's all the wrong policies.
Yeah.
The anti-energy efforts on their part. I mean, you go down the list, it's devastating to this country. We've seen price tags of up to over $100 trillion for a 10-year period. I don't think that captures the damage. I think we would be another Venezuela if these people were to take hold of the full reins of government and implement their wacko, extreme socialist / communist policies. I mean, these people are just off the deep end.
Hey,
economically.
Gerard, of course, we're going to be able to completely renovate and make energy compliant, green energy compliant, 2,000 to 3,000 structures per day, right? When even Howie Schultz, the former CEO of Starbucks, when he starts sounding rational and making sense, you got a big problem because these people are truly insane.
Yeah, and he seems to be trying to sound a little warning sign to these people that how deep off the end they are, and they're taking the party with them. We know that there's a steady stream of people that are deserting the Democratic Party, even if they aren't changing their voter registration. They're just walking away. They have no intention of supporting any of these people. And the old school folks, are being rejected by other Democrats, such as the millennials. So Joe Biden, for example, is not going to be nominated. Hillary Clinton, even though she'd love to be nominated, and says she isn't, but she really is running, she's not going to get nominated. And even them, they were pretty off the deep end as well. These newest crop, though, are just totally unbelievable. They're just, and what's really amusing to a lot of folks is AOC Ocasio-Cortez actually is supposed to have a degree in economics, but she can't articulate the simplest economic concept there is. She doesn't seem to have any knowledge of what she's talking about.
She's a stooge.
I certainly haven't heard anything she said that makes sense in economics.
She's a complete stooge. She writes an awesome tweet, but outside of that, she has zero talent, zero intellect. You know, I get comments back, oh, you're just an old white guy talking about white guy problems. You didn't give any argument why she's a moron. Look, anyone who supports Ocasio-Cortez and socialism, or anybody who supports socialism at this point in time, Gerard, you don't need to do the argument. It's like being against Nazism. All right. I don't need to prove that Nazism is evil to say that people that embrace it are not very bright. And it's the same thing with socialism.
Absolutely. Absolutely. The evidence is overwhelming. If you take a look at the evidence, the numbers, the theory is overwhelmingly against it. People by now know that if you support socialism or any of its variations, communism, Marxism, whatever ism you want to call it, it just plain is a disaster economically. And you know what else people don't give it due credit for in the negative sense? And that is it also drives the country into moral bankruptcy. You have to have corruption to get around a socialist system. That's why there's so much immorality in terms of moral competency in so many areas. Why people lie, why people don't care. They break the laws all the time because that's how socialism works. If you want anything done, you got to break the law. And so it permeates the whole society.
Totally undermines it. And we don't even have to go into the Venezuela experiment. It's a bad science experiment that has failed miserably, put untold millions into awful suffering, declines in standard of living. I mean, it's a great ad for Weight Watchers. It's a simple matter. If you want to lose weight, just eat less. And the millions of Venezuelans have proven that, haven't they?
They absolutely have. And I might also add that the most recent number I saw for the inflation rate is 1 million %. Inflation rate.
That's today. Tomorrow it could be 10 million,
Yeah, that's unthinkable. I mean, you have to spend the money before it gets into your wallet because the value drops so quickly. I mean, that's just devastating in that. And I think, Venezuela is going to be overturned. I think the people are going to revolt. The aid isn't getting in that we're trying to help get into this country. I think it'll be overturned, but why do we want to follow those kind of policies?
Yeah,
why would the AOC and those other radical Democrats want to pursue that kind of foolish, foolhardy approach when most people don't want it?
No, it's proven to be a failure. But these millennials haven't learned the lesson, and they think history started the day they were born. Up until the present time, they never look any further. And since we don't teach history or anything else useful in the majority of schools these days, their field of knowledge, their scope of their knowledge is so limited and so small. Yeah, they can play really great computer games and video games, but when it comes to life, real life, they don't really have any experience and any knowledge on which to interpret that experience. So we've got a big problem in education, and I'm just hoping that something happens major there. The homeschool movement, they're fighting it tooth and nail. Charter schools are fighting that tooth and nail. So all of this is kind of going to coincide with the collapse of the Democratic Party. Gerard, I'm doing a research project now. You name me a failing city, and I will show you a city that has had one-party Democratic rule almost continually for 50 years or more. You know when the last Republican mayor was in Chicago?
I can't recall.
Well, put it this way. Al Capone was running the city at that point. They were just ending Prohibition, 1933. Wow. And every city that you can pick that is in decline in America has had almost nonstop blue Democratic rule going back to the 60s and before. Detroit, another example. I don't remember if it's 59 or 62, but that was the last time they had a Republican mayor. I'm not saying that Republican mayors are the cure for all that ails our cities. What I am saying is that there's a direct connection between Democrat mayors and the decline of our once great cities, because virtually all of these declining cities did so under Democratic non-leadership.
Yeah, well, you're absolutely correct. I don't remember each, Republican former mayor in all of these major cities, but you're right. Every example I can think of, it's true. And you see the cities that are run by Democrats continuing to do foolish things economically. For example, we have one city now on the East Coast that plans to give out the universal basic income to all their citizens. Now, where are they going to pay for it? I don't think they've said.
Yeah.
But that's another silly thing. It hasn't worked in certain countries in Europe where they tried universal basic income. It's failed. They spent a fortune, and nothing happened. It didn't do anything. Didn't solve any problem. I think Italy is just starting to do it now, and it's an idea whose time should come to completely erase it from the books. Why would anybody do that? It doesn't have any benefit. It's just another entitlement.
I know.
With no benefit to the economy.
Hey, when do you think the last Republican mayor was in Cleveland? This was more recent than you might think. It was.
I honestly don't have that because I crack more national office than I crack mayors.
I know, but I think it's important. Actually, Voinovich from 80 to 89.
Oh, Voinovich.
Yeah.
Sure, I remember him.
And the one before him, he was only there for 4 years, Ralph Perk, 72 to 77. But then you go back to 1942. And you could just Wikipedia this stuff, just any failed city. I did a cross-check, 10 worst cities in the country, and it was really quite entertaining because the average one had gone 50 years without a Republican mayor. So, like I say, I'm not saying, I'm not saying that Republican mayors are the solution, because I don't think that's right. But what I am saying is that solely one-party Democratic rule is the problem. St. Louis, Memphis, Little Rock, Springfield, Albuquerque, Oakland, Chattanooga, Pueblo, Baltimore, Anchorage. Okay, of those cities, all right, top 10 most dangerous cities, St. Louis, Memphis, Oakland, Baltimore, have not had Republican mayors in years. The worst places to live: Detroit, Dayton, Cleveland, all these places, no Republican mayors. So it's one party rule that causes this to happen. And the sooner people understand that, maybe we can get African Americans to desert the Democratic Party too. I'm not in favor of two parties. I think the Republican Party, the elite, the country club, Chamber of Commerce guys are just as corrupt as the Democrats. They're just a different side of the corruption. I think splitting up of the party system, fracturing it, if the Democrats go down, Gerard, I'll make this prediction: the Republicans will go down right after them because they'll have no more reason to be.
Well, they are going down, and part of my 2015 prediction, which I've updated, each year, is that the Republican Party will change too dramatically, and I detail that in my last two books. I go through what I think is going to happen, but there's a fundamental thing that's going on here, and that is I've researched presidential elections, which is my kind of sweet spot that I like to work on, and back 241 years, and every time you have a critical, historic presidential election, which 2016 was one of them.
Oh, for sure.
And that there are certain characteristics of those. One of the characteristics is that the parties basically realign themselves, and there's sort of a political upheaval in the party system, and they change dramatically. And you go back to 1896, the party changed dramatically then. And 2016, the parties, the cards were thrown up in the air, the deck of cards, and they're coming down. And one of the things is the Democratic Party is going out of business. A few years after 2016, I was hard-pressed to figure out what year, but now I think it looks like it's going to be 2021 for sure. The Republican Party, you're going to see a shift, too, because the Republican Party is becoming a much more conservative party. The establishment Republicans who have been running this party, the people, the old school, the John Kasich-type Republicans and that, the Mitt Romneys and that, they're on the way out. Do you know that in 2018, November, there were 49 incumbent establishment Republicans who were anti-Trump policies, anti-Trump, who are no longer in the House?
That's a good
part
start.
Of the reason that the Democrats were able to take over temporarily. And there are, believe it or not, 30 people who are pro-Trump policies that are now in the House. And there are a whole bunch of seats that the Democrats should not have won. And if the establishment Republicans had followed the people's will and didn't sit on their hands for 2 years, the Republicans would have still held the House. But the party itself, the Republican Party, the establishment Republican Party, is almost shut down. And one of the things I'm predicting now for the 2021 election is that those establishment Republicans who can't stand Donald Trump, the never Trumpers and the establishment ones like Mitt Romney and John Kasich, they're going to form an independent party. I think you're going to see Mitt Romney almost assuredly running for president.
Really?
With those kind of people like John Kasich supporting him. And I think that the Republican Party, as we know it today, will either change names, or if it doesn't change names, it's going to at least change its ideology to be a conservative party that supports things like the border wall and supports, strong military, traditional conservative policies. So I think that's coming. The Democratic Party is going to go out of business. The radicals, the Star Wars bar scene gone awry, those people are going to join the Socialist USA Party, the Green Party. Maybe the Democrat Socialists of America, which is a 501c3, will change into a party to give them a home. But they're going to be such a fringe that they can't elect national folks to office like a president. And so you're going to see them essentially shunted to the side. That's what I see going forward. Well,
that's what happened to the Whig Party, Gerard. They were really good in the cities, urban-wise. They had three presidents, one of whom they excommunicated after he became president, Millard Fillmore, but two other ones, both of whom died in office, interestingly enough, William Harrison and who was it? Zachary Taylor, both Whigs, although Zachary Taylor wasn't a devout Whig, and they both died in office. Interesting, huh? So,
and that was back in the early 1800s where they flourished, the Whigs flourished.
Before there were conspiracy theories. For good reason, and a good thing there weren't, because, we could go down the list.
Both parties are going to look nothing moving forward.
Agreed.
2022,
100%.
2024, they're going to look different.
Could not agree with you more, Gerard. Hey, we got to take off. Just tell us. So, greatnewsforamerica.com. How do we get your new book?
All the books are selling on Amazon. They're selling, and they also sell in a Kindle version. If you want to read print, they're print. If you like Kindle, you like electronics, you can get that too.
Hey, if you want the thing to read for you, you can do that as well. It's amazing what you could do now. I love your work, Gerard. It's always great talking to you. Like so many of us, we had our blinders on for a lot of years what these political parties were really about. And now Trump, he's the great unveiler, the great unmasker, and he's shown them all for what they are, right?
Absolutely. And the media is beside themselves because they always were able to destroy people they didn't agree with. They haven't been able to destroy him. By the way, his presidential approval rating is higher in my forecast models than in the polls right now, and he's up at 55% approval.
Wow. Amazing. Well, hey, Gerard, always a pleasure. By the way, guys, If you're listening on the podcast or on YouTube, please subscribe, like, and share. It really helps me a lot when you do that. Really helps get the message out, get the word out. Really good thing. So please do it. And you get to hear people like Gerard that you're just not going to hear from the good old MSM because they don't want you to hear. It's that simple. Hey, Gerard, always a pleasure. Can't thank you enough for coming on. And we'll talk to you again real soon.
You've got a great program. I love it.
The Financial Survival Network. It's all about what's next.
Financial Survival Network is brought to you today by Orin Resources, a junior exploration company with the appetite of a major. It's hot on the trail of the next globally significant discovery, creating enormous potential upside for you, the shareholder. Orin is one of the most aggressive exploration companies pursuing high-grade, scalable gold and copper deposits and has a premier 7-project portfolio, including its 2 flagships, Committee Bay in the Arctic and Sombrero in Peru. Orin's unparalleled technical team and highly experienced management has a history of success in advancing and monetizing exploration assets. No wonder Orin's been called one of the best in the junior exploration sector. Orin trades on the TSX and the NYSE under AUG. To learn more, go to orinresources.com. That's AURYN resources.com.
The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 3/19/19. For those numerologically inclined, please tell me what it means. Email us, kl@kerrylutz.com. Well, one thing I do know how to do is add up numbers. Even if I can't do them so fast in my head anymore, I can do them on my built-in app. Yeah, that's right. We don't have calculators anymore. We have apps on our smartphones. And what I can tell you is that the debt boom in student loan is unsustainable, can't go on. Finally, something that's actually fiscally sane coming out of the Trump administration. I'm talking about their desire to force colleges to pay back defaulted student loans, at least within a certain period of time. Don't know the exact details. Sounds great. It will never happen. The educational industrial complex is way too powerful. The lobbyists are already out there buying tickets to sporting occasions for their local congressmen, buying them expensive dinners at the Capitol Grill in downtown D.C., all these good things they're doing to make sure that the universities don't suffer. Well, hey, Danielle Park is on, and jugglingdynamite.com is the site. And Danielle, as always, welcome. So we're looking at debt. How do you discourage debt? And pre-call, we were talking about let's make it taxable. Let's tax debt. And you mentioned just make it non-tax deductible so that you effectively pay for it out of your pocket. You know, is it any different? A debt addiction, is it any different than cigarettes, alcohol, drugs, etc.?
No, but I would say it could be potentially worse for a wide scale, like not on an individual. Well, it's interesting because I was just reading a bunch of medical journals that have recently brought out studies about wealth shocks, financial shocks, and the direct correlation that has with health problems, mental health problems, and shortened mortality. And they have shown that, for example, just the market decline in the last quarter of 2018, it took a whack off of people's savings because they're so risk exposed. At the same time, you have softness in real estate, and that plunge in net worth, even where people have significant amounts of money, has a direct correlation to sleeplessness, addiction, suicide, the development of anxiety disorders, all that stuff. So absolutely, the more leverage and debt that a society has, the more stress and fragility and health problems and all of the above that are going to flow through. So I would say on a a systemic basis, high leverage is a massive health threat both to individuals and to the stability of the future and to all sorts of things that are required in society to keep stabilizers in check. So the thing we've done wrong for at least the last 30 years is we decided that debt was the elixir and we wanted to add more of it at all times. And that was while rates were falling, right? We had the discipline in the 1980s as in the 70s and into the 80s as interest rates rose. People had a natural inclination to want to get out of debt quicker, to try and pay things down faster, to try and minimize how much they took on. And indeed, you had lower valuations in property prices as rates rose because people could afford less house. So this is the natural equalizer, and it's a very healthy balancer, if you will, in the real economy. So what we've done wrong in the last 30 years, as I said, as interest rates were naturally falling, as demographics were aging and boomers were needing less capital to borrow, is that we allowed central banks to then re-stimulate, come in and start trying to goose that slowdown every time the natural pace of debt was decelerating. They came in and said, "Hey, let's spike this punch some more and get people to take on more debt." And they were remarkably successful, of course, because as rates were falling, people had an incentive to refi and say, "Hey, when I took out this, I still remember this. A mortgage I had in the late '90s at 7%." Went to 6, went to 5, and you kept having the incentive to refinance. And even if you had to pay a penalty, you got out and you could, get the mortgage at a lower rate. So now we had that for so long that people became, of course, as we'd said before, if you'd taken the opportunity of falling rates to consolidate and pay off debt, keep your payments the same and get rid of it, everyone would be in so much excellent condition right now because they would have had an incentive to be debt free. Unfortunately, the incentive worked, as you know, exactly the opposite way, where people doubled and tripled their debt because they could pay more with less in terms of interest income. So, yeah, it's been extremely dangerous, and it has fraught much difficulty in the overall population today, and it's why we're seeing such angst, frankly, between the generations at the moment, because you've got the elder generations, the boomers, who have benefited from the inflating asset prices. They tended to be the homeowners and the security owners. And you've got the young people coming out with just the offsetting equation, on the income statement. They've got the debt on the balance sheet. They've got the debt that supported the asset gains for the older people, and they're just not able to partake in the same way that their parents did.
Yeah, it's really true. They've got the student loan debt, and then they're making less money. In your article, and it was dealing obviously with Canadian millennials who choose the Canadian equivalent of bankruptcy, and I guess in Canada, you can discharge your student loan debts. In the U.S., you cannot, but they were making substantially less than Gen X, the preceding generation, and obviously the baby boomers. They're making 4% less, which doesn't sound like much, but it's really a lot of money, especially when you don't have any. And only 3% of them own their own homes. So, look, I understand that our whole economy is debt-based and debt-fueled, but if we ever hope to get anything under control, we've got to make the price of debt higher than self-financing, because what debt does is destroy savings. Because what is savings? Savings is the act of deferring consumption rather today for a benefit in the future. And debt is encouraging you to consume today and pay it back in the future. So they're really the mirror image of one another, and it's very destructive.
Also, we had the perverse addition, let's not forget, not only did borrowing rates go to all-time lows in the last few years, but at the same time, savers were making zero on their money in the bank, zero on cash deposits, and next to nothing on even guaranteed deposits. And of course, you recall in 2013, it was that Bernanke was taken to task for making it so that savers were basically, struggling to make ends meet. And he said, well, you should take your money out of safe deposits and put it into the stock market and try and make more yield.
Right.
That was always the maniacal plan, right? Was to force people out of savings and safety and into risk and harm's way so that they could bail out the speculators that had blown up the economy in 2008. So the deal that was made there was horrible on both fronts. It was, allow everyone to get very destructive drugs in the form of credit for very little interest, and at the same time destroy all incentives towards savings. And that's why we have so many holes today in the financial fabric of the world. Everywhere that you look, we have, the highest unfunded liabilities in pensions and households and families, and corporations have the most debt. I mean, we've just done it all exactly backwards. So in the aftermath of that, if we can, take something productive from this very negative chapter, it would be that we should stop allowing tax deduction for debt, stop making it so easy for people to get into homes with nothing down or very little down, stop paying executives in shares of companies so that they have this huge incentive to, do everything they can, borrow money and inflate asset prices for their stock, but rather pay them in debt so that they have every incentive to make sure that the company is solid enough to pay back the principal and make the interest payments. If you could just do those two little things, stop making it tax deductible and start paying people in debt rather than shares, I think you would have a long way. The third thing, of course, is to get the crazy people out of the central banks. They are now talking about the next iteration of this, now that the global economy is slowing. And clearly, they haven't fixed the debt problem with tons more debt. Surprise, surprise. Now they're talking about things like, going negative on interest rates in the United States, something that's already been in place in Europe and Japan and has been
worked.
Very that one of the highest incidents of crime right now, growth in crime in Japan, is among seniors who are getting into all sorts of illegal activities because they're desperate for cash. They've had negative yields in Japan for years now, and these are people who went into this crisis period with higher savings than average. Higher savings than we have in North America, but you still can't live on nothing when you're, trying to live on your capital. You're literally eating your seed corn. And not only that, even if you're not getting interest in these places, they're actually paying for the privilege of parking capital in financial institutions because they're being, penalized for having savings. So the incentives are so perverse, Carrie. We should not be surprised that we've got this mess. But a couple of things that I do notice. I do notice that the people that are older, our generation and above, tend to have some sort of, I think, unfortunately, incorrect perceptions of the generations behind them. I hear things like, oh, they're lazy, they're unmotivated, and I think that's just tone deaf when you look at the reality that the boomers were bailed out by central banks in the last decade. They're the ones holding the assets. And the young people have no opportunities as a result of that, or very less opportunities. And they have had this inflation in the things that matter most to the young, which is education costs, because directly related to the same debt bubble. Yeah. They also can't find housing. Even rents have gone insanely expensive. So it's very hard to launch when you can't get a good job and your leg is got a chain and ball of debt around it. So I think that the balancing, or the rubber hits the road in the reality that boomers need income as they retire. And we're the flip side, or the corollary of too high asset prices, is low yields on those assets, right? So because prices are so high, rents on properties or dividends on securities are not high enough to pay people the income that they were banking on in their retirement. And so that brings us to a tipping point where people, and it's already started, they're starting to have net withdrawals. They're starting to need more out of pensions than pensions are putting in. They need to start liquidating assets in order to free up cash. And that's where they need this younger generation to step in. And right now we've got a huge gap in ability of the young people to take over, to buy those assets, to provide that liquidity and the prices the old people are wanting to cash out at. And so I'm really confident that it's going to have to work itself out, because both groups need each other, but mostly the older people need the younger people at this point, both to fund them in their old age, to pay into their social programs, and to buy up the assets they're trying to liquidate.
Yeah, absolutely. Couldn't agree more. I think it is a big entitlement generation, probably more so than the baby boomers. But, I got a letter from a millennial saying, you baby boomers have really screwed things up. And I couldn't agree with him more. I mean, we're the ones that went hog wild over debt, through our generation, which, let's say, is 46 to 64. So we started kind of taking over in the 90s, and everything fiscally has gone downhill since then. A completely irresponsible and incorrigible, corrupt generation. And I don't see the answers, though, coming from the AOCs of the world, who basically have no economic understanding and don't really understand where the problem came from. Theirs is just put the government in charge of everything. It's all going to work out fine. Don't worry about it, but we know.
The only thing I would point out about that is, and I follow the stream, and I realize there's a certain what do you call it? Naivete at play there. Absolutely. Young people don't have the experience that older people do. But I will say that old people with all their experience and with all their so-called command of the economic theories are the ones who have orchestrated this total disaster, right? So I think we lack credibility when we try and attack the young people for a lack of knowledge of things like classical economics, when classical economics has clearly been the, siren song for all that's gone wrong here in the way it's been applied. So I think that they are upsetting. I think that the young, more vocal people coming in are upsetting the status quo, threatening the status quo. I get it. But we have to understand that we need to work together in this. And that means giving to get from the old folks. That means we have to literally, stop trying to just inflate assets and have it all our own way, and realize that prices have to come down in order for income yields to climb and for affordability to be restored, and to get taxpayers into the system to help fund the stuff that the old folks are counting on. So they definitely have to work together in this.
I could not agree with you more. And what you're saying is true. Well, classical economics, Austrian economics, has never been applied here. And even basic Keynesian economics would be plenty warning that the path we're going down, the path we have been going down, was going to be deadly. So it's just politicism over economic reality. That's what we've had. That's what's gotten us here. It's got nothing to do with right or left, because both parties have stood for exactly the same thing and have done exactly the same things when they've had power. And now we're getting to the end of this grand experiment, Danielle. And I just don't know.
Another thing that I comes to my mind all the time when I'm listening to the debates between, different groups. And I think that it's hard for older generation people to comprehend that just because we've done something a certain way in their lifetime, when there was 2, 3, 4, 5, 6 billion people on the earth, doesn't mean that we can continue to do it that way when there's 7, 8, 9, 10, 11, 12 billion people on the earth. And so, there's a reticence to adopt new ideas sometimes because, well, that's just not the way it's done, or that's not the way we've done it. And the point is, yes, that is true, but you are unrealistic to assume the status quo can persist with all of the evolving facts and figures that are before us here. And so that's why I think that, another example is, frankly, this whole discussion with China and the trade talks and, the angst that's going on there about the taking of technology and the stealing of patent information and all that. And I've heard a lot of people almost turn it into a racial comment, that, quote, that's what those people are like, sort of thing. And the reality is that if you read history, if you study anything about the developing economies, you'll know that this is exactly what's always happened between emerging and developed economies. economies. Europe stole off of the UK when the UK was the dominant power and Europe was struggling. Japan was also, one of those countries that was taking information from places like the UK and the US in their emergence in the 70s and 80s. So, if you look at it, this has happened like this a million times before, as has this pendulum between generations, as has this story of debt gone from bubble to bust, and then, a slow climb back from a long period of sideways. This is all very normal. And I think we have to stop as people trying to blame a generation or a nationality of people and say, it's they're doing this and they're not doing that, and realize this is the classic story of the human struggle, and it'll never go away. It'll always be the same. And it's always a case of pushing against status quo, evolving systems, change, breaking it apart, and starting over.
Yeah, creative destruction at its finest, Danielle. And of course, it's not anyone's responsibility, but definitely the responsibility lies with the baby boomers for getting us into this situation now. And hey, if we had interest rates that really reflected risk and that really were set in a market rate fashion, a lot of what we went through would have never happened. The boom and bust occurs often because of artificially low interest rates that make projects that wouldn't otherwise be economically viable. I'm talking particularly in real estate, where you can really see the difference between a 3% interest rate and a 5% interest rate. So keeping these rates down, besides harming savers, causes the malinvestment. We got malinvestment galore all over the place. But today's malinvestment is tomorrow's sound investment. Once it goes through the cycle and it gets washed out, the debt gets liquidated, then those assets continue on in life. And
so the question I have right now is, how are we going to get the maniacs out of command in the central banking system? Because this is an international phenomenon. This is not about any one country. If you think about it, you've got the same thought and dogma being employed, whether it's the Bank of England, the Bank of Japan, the EU. Mario Draghi last week said that his quote was that negative interest rates are working well. I mean, if you talk to anyone that's functioning in the real world, like even pensions or insurance companies, even in the financial sector, who are trying to, make their business models work in an environment where capital is being charged for the joy of being in existence, where the youth unemployment rate in Europe remains, double digit, where savings deficits are everywhere. Pension promises are defeated. This is a lunatic comment. This is beyond tone deaf. And this is a person who now is talking about, well, we'll just look at buying stocks. And we have a leading case study for this nonsense, and it's the person of Japan, right? Well, Japan has been doing this for 30 years. And the Japanese stock market remains today 30% below where it was in the peak of 89. As I said, the interest rates are negative there out to 10 years. So 10-year treasuries all the way out, earning less than zero for people. And you've got this huge problem with old people not being able to fund anything and young people being not able to launch or get started because there's just, so many imbalances in the society. So it is a very destructive force. And because these people were so instrumental in bringing in and implementing the policies that have done all the harm, it seems that it is impossible for them to see the error of their ways. Hence, we must simply get them out and replace, either to change the system entirely so that central banks are not the prestidigitators they've been allowed to be, which is certainly one of the approaches one could take to this. But if we're going to have a central banking system, then we need to have entirely new thinking in there. And that's one that decides that low rates and too much debt are the disease, not the cure.
Yeah, well, good luck there. I got the questions, but I don't have the answers to that one, Danielle, other than nothing short of collapse is going to dislodge these people from their positions of power. It's just not going to happen. Anyway, that's it for this week. Make sure you check out Danielle's site, jugglingdynamite.com, especially read her commentaries. Very insightful and powerful. Check out our site, financialsurvivalnetwork.com. Sign up for the newsletter. We got a webinar coming up today at 9 p.m. Eastern time. Just send me an email and I'll give you the info. I'll send you a link. And hey, send us an email, kl@kerrylutz.com. Danielle, talk to you in a couple of weeks.
Thanks, Kerry.
The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today is Tuesday, March 19th, 2019. Hey, don't forget, if you haven't signed up for our webinar, our live investor summit, we're dealing with gold royalty companies. We're dealing with expert Adrian Day, who wrote the book on resource investing. Just go look at the site. It's on there, financialsurvivalnetwork.com, or email me, kl@kerrylutz.com. Well, speaking of building wealth, speaking of what is your next move in this crazy economy, if you are in a high-tax state, you probably thought about moving to a low-tax state, a state with no income tax, with better weather, with much more economic freedom, with less government. Especially if you're listening to this show, you've really thought about it. And you don't have to move fully. All you need to do is change your domicile, and that's basically evidenced if you spend 185 days or more in a particular state and you've switched your license, all your bills go to that address, you could still spend upwards of 6 months in your old place, your old jurisdiction, your old state, and get the benefits of tax-free living. Well, someone who's an expert in this area, who's been dealing with you tax refugees from all over the country, is a gentleman by the name of Robert Paolini. And Robert, welcome to the show. It's really good to have you. So you're selling real estate to people here, obviously. Mm-hmm. A lot of them are coming from these high tax jurisdictions, aren't they?
Yes, they're coming from places with higher local municipal taxes on real estate property, states that include state tax, and that don't give the kind of breaks that you get for property ownership and even multiple property ownership that Florida gets above and beyond some of the coastal attributes that attract buyers.
Yeah, so they're coming from states like Illinois, New York, New Jersey, Connecticut, Maryland, Rhode Island, you name it. They're coming from all of these states, aren't they?
Oh, yes. All over. I would imagine almost all 50 states, especially California, even Hawaii, Seattle, New York. Mm-hmm. Yeah, they love our prices, even if they know nothing about our tax laws. Yeah.
Well, one thing, I'm sure you've heard it, though, from people that you're basically, after the latest tax change, which reduced the state and local tax deduction, I'm sure that you've seen a lot of people mention this, haven't they?
They have, but we have a lot of other trade-offs here that and increases in other things, especially with coastal property. Like if you're literally on the beach that faces the Atlantic, you now can own and restrict passerbyers all the way up until the water line. So now you can actually own your own backyard. So there's so many other little trade-offs. Plus, in some cases, our property values are more than a third under some of those other ones. And of course, who doesn't love Florida? They call it, heaven's waiting room, right? I mean, I've been
God's waiting room. I heard
retirement home.
Yeah, God's waiting room.
Yeah, exactly. And that was before I even moved here that we realized that. That was 25 years ago. Yeah. But it's just they'll buy retirement homes and rent them out, which we have Airbnbs like crazy around here until they're ready to retire and move down and live there. Yeah. It happens more often than you think.
So you're on the west coast of Florida. You seeing a massive building boom here?
We have actually, but every other state seems to be slowing down, especially in California. But for us, it only took the price of 30-year-old homes to go up above the cost of a brand new one for that to change. And we have enough surrounding geography where there is space to build.
Mm-hmm. So, yeah, there's less building restrictions in Florida. So, of course, more building. You see, it looks like Beijing in parts of South Florida, where there's just cranes
like
as far as
Dubai.
Yeah, as far as the eye can see, you're seeing it. Obviously, another building boom. It's funny when you think back to right after the Great Recession, you couldn't give these houses away. Houses that had been selling for $250,000 a couple months before, going off at knockdown auction, $50,000 to $70,000. I mean, it was no one wanted to touch the state back then. Isn't the transformation rather remarkable?
Yes, but time flies. What is it? Probably 13 years have gone by from start to finish. And I think that's really what the biggest factor is. It's that buyer confidence started to go. And then, of course, the momentum and value. And things are cyclical. So, yeah, but it's great.
Yeah. So what a difference a decade makes, for sure. So you could still find these waterfront properties. Are there still deals to be had out there, do you think, or is it fully priced?
There are deals, but because the financial institution that we're surrounded by is a lot more stable than in 2008, there's just so many buyers still, which is really what's keeping the market still healthy. So I guess you could look at it as a really good thing. If the inventory exceeds the buyers, that's your, economics 101, and that's the beginning of the problem. But people complain about the prices, but they won't let them drop, because once a deal shows up, there's always someone to buy it. Yeah,
I have a friend put a boatload of money into her place. I didn't think everything she did was that rational, but she put it on the market. 3 weeks later, she had a sale and at close to asking price. And, one thing I notice in Florida, so you got two kinds of people, but primarily the market is dominated by people who just want to move into a place and not do any work, particularly if they're coming from other states. And then you got the people who like to do the flips and, basically major renos. Is that what you see up in your neck of the woods?
Oh, yeah, exactly that. Because nowadays, with the culture of people buying houses, I shouldn't say nobody, but very few people have their 20% to put down and limited amount of resources to make all the custom updates they want. But it's so much easier to throw that tab on a 30-year mortgage, amortized over 300 some odd payments, to where it's like an all-in-one. It's less headache, less hassle, more convenience, and they're putting it all on the seller, and those sellers who are selling finished, move-in ready, clean, updated homes are exponentially getting more value for their home.
So there's a lesson here, isn't there?
Yes, in this market, the value should be in the home itself rather than price reductions, or otherwise we're just making more noise.
Mm-hmm. And really, so obviously interest rates going up have had an impact upon the market, but it doesn't look like it's fatal here, does it?
FSN Radio. It's all about what's next.
Egypt is on the verge, once again, becoming a world-renowned gold producer. The golden age is being rediscovered. For millennia, ancient Egyptian kingdoms prospered from unparalleled riches. Pharaohs built their empires and flaunted their abundant wealth that was made possible by the country's resource-rich gold deposits. Despite this rich history, modern Egypt remains one of the most underdeveloped gold mining countries in the world. Aton Resources is at the center of the modern Egyptian mining world, diligently working both as the only public exploration company in Egypt today and as the advocate for mining reform with the Egyptian government. However, those that arrive early like Aton will reap the best rewards. Aton's discovery of the legendary Lost Mountain of Gold at Rodruin and its current aggressive drilling program there could potentially reap those rewards. Aton Resources is focused on its 100% owned Abu Marawat concession in the Arabian-Nubian Shield, located 200 kilometers north of Centamin Sakari's world-class gold mine. Aton possesses first-mover advantage in the under-followed jurisdiction of Egypt, which is currently undergoing mining reform. platform. To stay on top of Aton's latest drill results and news, go to atonresources.com. Aton trades on the Toronto Venture Exchange under the ticker AAN and on the OTC under the ticker ANLBF.
The Financial Survival Network. It's all about what's next.
No, and those are all strategic. Interest rates don't go up by themselves. The big boys know how to make things move and change and reset. And if we can't do it organically by ourselves with the inventory, supply and demand, all it takes is an interest rate spike. Those wanting to get their money out of the stocks and get some safe interest, and then use some of the extra equity left over to kind of invest in real estate. Because interest rates go up, it's going to kick out our first-time home buyers. And right now, those are our best buyers. And then, of course, there's a lot of holdings on corporations with multiple properties that haven't unleashed their rental pools for sale, which would, overnight saturate a market.
Yeah. So there's still a lot of hedge funds and such. They're holding on to properties that they've been renting. And I heard that they were going to, a number of them, maybe Blackstone, going to switch to rent to own at some point after the changes in Dodd-Frank. Any indication of that?
Yes, they do. They even have there's a company that helps facilitate that. We have one here. It's called American. Well, don't quote me because I don't know if I'm going to get the name right. But it's a company that buys these FHA homes and basically rents them out for a year, and then with a lease option to buy at the end of the year for that same buyer.
And they probably even credit some of the rental to the purchase, right? So you make the down payment requirement?
It depends on the terms, but in most cases, they just waive that. I think some of that profit is calculated into the rent and maybe allocated for whatever upfront cash is required, because that's typically what they need the most, is the cash to close.
Yeah.
But if they have the credit, we can work that as agents. As realtors, we can negotiate for seller concessions, money from the seller to go towards closing costs, updates, upgrades, buying points to buy down interest rates if that buyer is going to stay there for a long time. And because there's value in the homes, they're appraising at the price some of these sellers are listing them for, but because of the buyer scarcity and in some cases it's just not being fixed up enough to attract that buyer, they're not getting the offer they want. But that doesn't mean it wouldn't appraise. So an example like that, if somebody wanted $260 for their house, but no one's willing to pay $250, but it would appraise for $260. Well, we can work out a deal. We'll offer you $260 if you give us $10,000 for the buyer to cover closing costs. It appraises at $260. Everybody wins.
Mm-hmm. Yep. And so where there's a will, there's a lawyer and probably a realtor right behind him, right?
That's a good one.
So, Hey, what about?
There's a lawyer.
Yeah, well, estate sales in Florida are a big source of sales, right?
Oh, yes, especially with the baby boomers, my parents are baby boomers, and we're going to have a definite macroeconomical spike from those statistics for sure. Mm-hmm. There'll be a lot of detached and attached in-law suites. There'll be a lot of maybe condo sales or buys, that kind of thing.
Mm-hmm. Interesting. So you need to be on the lookout for that. So market's interesting, and it's interesting. They always say, there's no one market there's no one real estate market. There are like several hundred different real estate markets. And based on what you're saying, that seems to be true, doesn't it?
Right. We're not even talking about the commercial sector or the multifamily sector, which is huge. Condominium conversions to apartments, tiny home lots converted from modular home, like mobile home parks. The 55 and up mobile home communities are kind of, they're not trending really. I mean, most of the millennials now whose parents are, going to be going to that age, they don't want that. They've invested in the idea of mom and dad are going to live with me and we'll take care of them and we'll live close to them, but we don't want nursing homes and we don't want, the 55 and up mobile home parks. Mm-hmm. So there's a ton of stuff. If big time investors look at it from a macro perspective and just follow who we call it the now client. who is most to benefit from this type of market.
Yeah. So interesting. And everybody's moving to Florida. Basically, every age group is really moving here. Obviously, boomers more so than others. Mm-hmm. But, that's what I found interesting about the state is from the age standpoint, very diverse. Not all old people.
Absolutely.
Yeah.
Diverse in all aspects, I feel like. I mean, it's, surrounded by a few different bodies of water. And, it's a melting pot, a lot of resources.
Yes.
And absolutely. And the municipalities have positioned themselves correctly to be able to, highlight those features and keep our state as strong as it's always been.
Yeah. And, every town you go to in Florida has its own character. There's no two that are really, you'd say, are exactly the same. Each one is definitely got his own little quirks.
Absolutely. It was all handed down from kind of what they had to go through to get established. And, those habits sometimes never change.
Yeah. Interesting. Hey, people want to find out more about you, connect with you on the web. Where is the best place for them to find you at, Robert?
Well, for specific real estate and property information, ezfloridahomesearch.com is good, but more so about what we teach, whether it be other sales professionals, realtors, anybody looking to get into real estate in any of the sectors, you want to find me on goodtalknation.com.
All right, goodtalknation.com. We'll have a link to your site in the show notes of this interview, as always. And any questions, comments, etc., email me, kl@kerrylutz.com, Twitter handle @KerryLutz, Facebook page, Financial Survival Network. If you're listening on YouTube or to a podcast somewhere, then please subscribe, like, and share. Really helps me a lot when you do that. Helps get people like Robert out there in front of you. All right, we will talk to you again soon, Robert. Thanks for stopping by.
Thank you, sir. Have a great one. I'll talk to you soon.
The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 3/20/19. It's Fed Day. What is the Fed going to do? Well, certainly they're not going to raise rates. That would be a shocker. That would throw a real monkey wrench into the markets for sure. Probably not going to do anything, not going to cut rates. Just wait and see. The economy is fundamentally strong and we're just sitting back, letting things play out. That's probably going to be what happens. What do you think is going to happen? What do you think the Fed is going to do? Probably by the time you hear this, the Fed will have already done it, but just send us your opinions to kl@kerrylutz.com. Well, somebody who does have an inside track, at least in terms of really solid trading credentials, really solid ability to peel the headlines away and see what's going on under the hood, is Nick Santiago, InTheMoneyStocks.com. And as always, Nick, welcome back. So the Fed, today is Fed Day. Gold was down $6.50 the ounce after having been up $3 or $4 earlier in the day. Now it's down only $5. What do you see happening here?
Well, right now, there's just a lot of jockeying for position. You just had some headlines come out about President Trump saying he's going to keep tariffs in play with China until a deal is really struck. He's not looking to remove tariffs, and it may be a long, long time. So that's all coming in, and there's a lot of jockeying for position before the Fed announcement. The FOMC is going to make their interest rate policy statement at 2 p.m. today. So basically, you just got a lot of jockeying for position. But when you look at the gold chart right now, and this is something that I've been doing. Last time I was on your show, I said gold has had an amazing run. It's due for a pullback because we went into a lot of resistance. Now it's all about the pattern. So if the Fed is very, very dovish, we're going to see gold make a move today. Spot gold could go easily right back to 125, 125 and a half. That's GLD would go back to 125, 125 and a half. If you take a look at gold futures, I think they can actually go to around 1325. So, I don't really see them going much past that. But again, it's going to be all about what the Fed says. They're not expected to make an interest rate policy decision or change, I should say, but they are going to change the verbiage. And maybe we'll hear a little bit about that quantitative tightening as well.
Yeah, so the quantitative tightening, you have to explain that a little bit because many of you out there aren't familiar with it. Basically, it is the Fed's purported effort to unwind its balance sheet, all of the mortgage-backed securities and treasuries that it bought during the Great Recession, during quantitative easing. They're going to get rid of, supposedly. How sincere is that effort, Nick?
Well, they started to really do it quite a bit in the past several quarters, but now they've really they know that the market after the December sell-off couldn't really handle it, so they've really backed off. And today, I think most traders and investors are waiting to see, is there a magic number? Is there a so-called dot plot that they were using? Prior to this, they were going to spin out $50 billion a month, and that's what they were doing. But again, these guys got $4.5 trillion that they have to unwind. It's a lot of money, and there's a lot there. So it isn't going to happen anytime soon, and we'll just have to wait and see what Fed Chairman Jay Powell says today.
Yeah, and if you had to guess, what do you think he's going to say?
I personally think he's going to tell us everything we think we already have heard. He's going to just basically say, we're watching the data. We're seeing that the economy is slowing. Last night we had earnings from Federal Express that basically said the same exact thing. And FedEx, down about 5% today. So, I think he's just going to stick with that spiel. There is also going to be a press conference afterwards where he's going to have to take Q&A from the press. And I think he's basically going to give us some insight on the QT of the unwind, but I really don't know what he's going to, what number he's going to throw out there if he does throw a number at all. But I have to think he's going to be dovish. Yeah,
he's going to be dovish. Do you think he'll pretend to not be dovish, and or does he just capitulate?
I think he's already given in. I don't think he really has the. He can act very, very hawkish at this stage of the game at all. I think he sees the market as being a fragile instrument. Outside of the United States, you have to really look at some of these. Europe is an absolute disaster, and Mario Draghi completely capitulated already and basically said he is not raising rates, and I think he's got probably another year to go in his term before he's no longer the ECB president. So the Fed has to help him out a little bit, or at least I think they will. And, if the U.S. raises interest rates, that just puts tremendous pressure on him as well as the Bank of Japan, and I don't think the Fed is looking to do that right now.
Yeah. Yeah, they've got to tread lightly, and if the U.S. goes in a different direction than the world's central banks, that's going to result in more capital flow to the U.S., more money pouring into the country, and as a result, it's going to be deflationary and injurious to our so-called allies in Europe, Japan, and elsewhere.
Absolutely. And we've already seen that. I mean, honestly, it has already started. I mean, I know the dollar has backed off a little bit from its recent highs, but Kerry, I've been bullish the dollar and I remain that way. So, I don't really see anything changing that picture. These other central banks, whether it's, the Bank of Japan, who's been fighting deflation since 1989, they really can't go ahead and do much. And then you look at, the ECB. I mean, they're really back is against the wall. I mean, they've really, crushed that market over there. And again, it's a failed science project. It's not a matter if it's going to fail over there. It's a matter of when it's going to fail. And that's how that. And traders know that. Traders, we look at charts. We're not looking at the headlines, or we don't even really care what is being said. The underlying theme is in price action, and that tells us what we want to know.
Everything is about price, right? The price.
It's all about price.
And the price can lie for a little while. They can manipulate it, but in the end, the price is going to assert itself, isn't it? The true price.
Absolutely. And we've seen that in 1999 going into 2000. We saw that in 2007 and 2008. And, you will see it again. I mean, right now, I still believe that there's plenty of liquidity in the system. So, we had that big December swoon. Actually, it started really in September down to December. Now we're at another pivotal juncture here. So, will the markets be able to get one more thrust higher? Yeah, maybe they could. But, we're really on borrowed time before we go into another, so-called minor correction, or maybe it even turns into a major correction. I happen to think, we're headed to more volatility in the next month or two. So, these markets right now have had a sensational move since December. I'm happy to say I've been a part of that run. And, now I'm looking at the market in a more cautious way up here at these levels. I do think there's potential a little bit more upside here overall, but the reality of it is, we're going to hit major headwinds again in 2019.
Mm-hmm. So you're thinking the market's heading south for 2019, or because it showed pretty remarkable strength here?
Yeah, I think we had an incredible run, but now the easy money's been made. And even if you look at a chart of the S&P, you'll see that, we basically put in a little bit of a high around late February, and we've really, have gotten a little bit higher than that range, but not by much. And, there still could be one more short squeeze thrust as we go into the end of the month. This is end of quarter. So, as we go into the end of March, we could get, one more nice surge. But you get into April, May, June, those are, there's an old saying, sell in May and go away. Sometimes it doesn't work. It's going to happen this year. So, this is going to be a sell in May and go away, or, stay around and trade. You could do either or. I'll be trading it. But, again, I think we hit major headwinds when we get into April and May, and, could even start, really right around the start of April.
Yeah. Huh. So gold, you think later on, we're talking interest rates cuts later in the year, got to be bullish for gold, right?
I would think so. I would think that right now, if the market goes into a swoon, say May, June, July, and potentially even August, you're probably looking at a rate cut in September.
Mm-hmm.
That's a rate cut, not a rate hike. I know everybody's thinking rate hike, but if you look at the 10-year U.S. Treasury note yield, which is something I follow each and every day, it's already broken down. It's already in a bearish trend, and again, you got a major pivot from the start of January at around 2.55% on the 10-year, but the reality is once you break and close below that, this thing's going to go down to 2%, and that's a level where I think, bond yields can start to bounce and move higher. And just so that your listeners know, when bond yields go down, bond prices go up, and vice versa.
Of course. Yes. And hey, if the yields start taking it on the chin there, that's a negative obviously for the economy.
It is a negative for the economy if they start to break down, because people are going to say, hey, there's going to be some panic out here in equities. And what happens ultimately is that when bond yields get to, say, 2%, I do think that somehow, some way they'll get defended there. And then, but that most likely takes us towards that August, September time period. And, if you get the Fed, if they come out and they cut rates, we'll see how the market reacts there. But any kind of a dip like that is bullish for gold. So gold has held up very, very well, and, even better than I even expected. I was not expecting gold to outperform the way it has, but, it's still a constructive setup. Now it's going to be about that pattern. What does it do? And, can it put in some kind of a bullish base? Because we really had a tremendous move when we got to around 1350. Then it backed off, as we talked about on your show prior. And now, it's all about what kind of pattern can it make now. So, it's a wait and see, but the trend is still up.
Mm-hmm. Interesting. So oil still stuck in the doldrums?
FSN Radio. It's all about what's next.
Egypt is on the verge, once again, becoming a world-renowned gold producer. The Golden Age is being rediscovered. For millennia, ancient Egyptian kingdoms prospered from unparalleled riches. Pharaohs built their empires and flaunted their abundant wealth that was made possible by the country's resource-rich gold deposits. Despite this rich history, modern Egypt remains one of the most underdeveloped gold mining countries in the world. Aton Resources is at the center of the modern Egyptian mining world, diligently working both as the only public exploration exploration company in Egypt today and as the advocate for mining reform with the Egyptian government. However, those that arrive early like Eitan will reap the best rewards. Eitan's discovery of the legendary Lost Mountain of Gold at Rodruin and its current aggressive drilling program there could potentially reap those rewards. Eitan Resources is focused on its 100% owned Abu Marawat concession in the Arabian-Nubian Shield, located 200 kilometers north of Centamin Sakari's world-class gold mine. Eitan possesses first-mover advantage in the under-followed jurisdiction of Egypt, which is currently undergoing mining reform. To stay on top of Eitan's latest drill results and news, go to eitanresources.com. Eitan trades on the Toronto Venture Exchange under the ticker AAN and on the OTC under the ticker ANLBF.
The Financial Survival Network. It's all about what's next.
Well, oil right now has been holding up pretty well. So I've been telling my members, we're probably going to stick between $60 and $62 if we get another pop in crude. So oil's still holding up, but it's not going up in any major way. I mean, that's really the bottom line. It's going to be, sitting right around where it is. And again, 60 to 62 is probably the max upside that I could see in crude.
Interesting. So it could be stuck for that long. Wow. I can't believe that. But it was just to think it was only a few years ago, it was $140 the barrel, and it was killing the world economy, choking it off. Now the U.S. going to be the largest exporter of energy in the world, largest producer already. And who would have thunk? That's why the future is very, very difficult to portend. You don't know what's going to happen. And as much as you think you might, you don't, because nobody would have really ever believed what we're going through would be possible here. Everyone thought it was going to be $200, $300, $400 a barrel oil. And guess what? You were wrong. And that should tell you something about the difficulty of predicting markets, but certainly in the short term, easier than in the long run. Because in the long run, just too many trends that you aren't aware of, too many factors that you just can't take into account, because nobody can. Not even the world's greatest AI supercomputer can do that, right, Nick?
Well, I'll be honest. Sometimes you can really get a good handle on it. Sometimes it gets away from you. But back in 2008, I call that oil top, and it can be done. It's just a lot of work, and you just got to really understand these charts and really don't sway from them. Don't listen to the news. Don't listen to all of the media hype that comes out there.
Yes.
Just watch price action, watch the patterns on the charts, and you'll always have, even though you may not be perfect all the time, you'll have a really solid indication. And if you're wrong, you can be wrong small, and that's the key really to what I do in this business.
Yeah, hey, better to be wrong and lose a little than to be right and lose a lot.
That's right.
I mean, that happens. I mean, it's called being right at the wrong time, and that can be fatal if you can't get your head around changing market conditions and change your stance, your position. Then it can be damn near fatal. So,
perfect example of that, Terry, was just what happened in December, right? Mm-hmm. Remember in December, the markets were tumbling. And, if you didn't really know what you were doing, you probably sold out at the bottom. And then look at the massive rally we've had, this past year, S&P 500, up 13%. So, I mean, it's a perfect example of what we were just talking about.
Yeah, absolutely. Couldn't agree with you more. So, there any other markets we need to be looking at and paying attention to, Nick, for the upcoming rest of the year?
Well, I think the bond market is very, very important to follow, and you could just follow that easily by watching a yield chart. And we talked about this just a few minutes ago, but I think that's really talking to us a bit. All of these Fed meetings are going to be very, very important. We have the meeting obviously today, and then you're going to have this, late April, May 1st meeting, and then you have a June meeting, a July meeting. September meeting, in my opinion, is most important. But again, central banks, they are the key to liquidity. And, as long as there's liquidity in the system and it's flowing, markets can go higher. When that liquidity gets pulled away and there's a vacuum that gets sucked out, these markets will fall, and they will fall fast, and they will fall furious. And that's exactly what we saw in October, and we saw that again in December. So, I think traders just got to be able to follow that money flow and make sure they know when the liquidity is plentiful and when the liquidity dries up, because that's really what's moving the markets these days.
I couldn't agree with you more. Anyway, we go over to inthemoneystocks.com. What awaits us there, Nick?
Come on over. We put tons of content out each and every day. The traders can also come over and check out my Twitter feed. That's going to be at Nick Santiago 01. And again, we put tons and tons of content out each and every day. And we got a Fed meeting coming up, and it should be a blockbuster day. So we're looking forward to it. Get some volatility there, and then you have a Jay Powell press conference. Get to hear what he has to say. But for us, really, it's all about the charts. We don't really care too much about the news. We're just going to look and tell us, let price tell us what to do.
Yeah. Yeah, just, our shows appear on YouTube, Nick, and, this guy commented, when I heard the mocking chuckle and statement, Bernie Sanders will never be president. This is why I love what I do here. Be president. I sure hope not. And I had a flashback of the video compilations of the left mocking Trump and stating the same thing. He'll never be president. Makes me cringe. There is a difference. From the get-go, I said that Trump was going to be our next president. And guess who was right? So Bernie will not be our next president. He seems to get beat up a lot. I don't know if it's the wife, Hillary Clinton's goons at the Democratic, and I don't want to get political, but this is just an observation. At the Democratic National Convention, the guy had bruises on his face like he had been slugged. Like Hillary's guys said, Bernie, you better work this thing and everything will be fine. But if you don't, you're going to regret it. And evidently somebody...
They get violent, those liberals.
Yeah, they sure do. And there's nothing more violent than a liberal shower door, evidently, because it hit him in the head. He's got a gash. He's got a huge bandage there. Hey, I don't know.
I remember that.
Yeah, I'm all for conspiracy theories. But, these liberal shower doors, you really got to be careful of them. Anyway, hey, find us over at financialsurvivalnetwork.com. Sign up for our newsletter. If you missed our webinar last night, send me an email. I will send you a link for the replay. It was an amazing evening about gold royalty companies and royalty streams, the way to make money, whether the price of gold is going up a little or down a little, you will make money in these stocks if you play them correctly. I'm not telling you to do it. Obviously, I'm not a licensed financial advisor, although, hey, I could lose you money just as well as they do. Anyways, just email us, kl@kerrylutz.com. And if you're listening on the podcast channel or you're on YouTube, please like, share, subscribe. Really helps me a lot. Helps get ideas out there to people who would never get them. Ideas like Nick Santiago's that you just don't find on CNBC, the mainstream, even the alt media. You just don't find rational financial discussion and analysis. Nick, as always, we'll talk to you again soon. Thanks so much for coming on.
Thank you. Great to be here.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.